there. My name is Carissa Dorado, and I'm a mortgage loan officer here at Premium Mortgage Corporation. And I have the absolute pleasure to have two individuals joining me today to talk all about SONYMA and what it takes to have a successful transaction and demystify some of those things that we hear about accepting a SONYMA mortgage pre-approval and contract. So here with me today, I have attorney Jerry Wright. Thank you for joining me.
You're
And
welcome. Thank you for having me. So
absolutely
I'm a real estate attorney and I help people during the closing process. So I help them take a close look at the contract and at the closing documents. So I'll be able to answer any questions about those things.
beautiful. Thank you. And then also joining me today, we have Dan Gassel as a part of IREM Solutions, and he is an appraiser. So thank you, Dan.
Thanks, Carissa. So yes, I'm the chief appraiser and vice president over at IREM Solutions, and I'm here to help debunk some of the myths regarding the complexity of SONYMA appraisals.
Beautiful. And so what I thought would be a great way to kind of get the party started is use the timelines that we would go through, a client would go through as they go through the process. So I just want to start off by touching on a SONYMA is a state of New York mortgage agency. So what that means is it's going to have that little bit of extra rigor that comes with something that New York State is touching. So something to be mindful as we go through the process. So what I'd like to do is open it up for the pre-approval stage is the first piece of the puzzle with the SONYMA. And with the SONYMA, it does take a little bit longer for me to typically get a client pre-approved. And that's because SONYMA has a lot of those income caps that I have to ensure that a borrower is not over. Now, the income cap isn't specifically to the borrower either. It's actually the household income. So that means if I don't have the spouse on the mortgage application, I still have to go in and take a look at the spouse's income, which just means it's going to add a layer of time to it. And also with that, there's tiers to the different mortgage products, and those tiers are based off from the income. So again, it just comes with a little bit of extra time to ensure that we have the income nailed down perfectly. And the reason why it has to be nailed down perfectly is SONYMA has strict debt to income ratios. We do not have any wiggle room that comes with some of those other mortgage products. Another thing to note is the credit report itself. So SONYMA doesn't really even care about the credit score, but they care about any late payments, collections, and how an individual's paid their bills over the past 24 to 36 months. So it might just take a little bit of extra time to dive into those little spaces and ensure that we're fully good to go. Now, the other really cool thing about SONYMA, this is one of my personal favorites, is the interest rates. So the interest rates on a SONYMA are different than interest rates on conventional, because if a conventional mortgage product, if somebody has a little bit of a lower credit score, there's an adjustment to the pricing on their interest rate. So within the SONYMA interest rates, there's actually no pricing adjustments. You get the interest rates that's noted on their website. So it only adjusts minor for if you're taking a down payment assistance. And when I'm done with the pre-approval, everybody's going to be getting an interactive pre-approval, so they know exactly what the numbers are going to be like for the mortgage payment, the closing cost, the interest rates, all of that jazz is going to be sitting right in that space. So that's that pre-approval part. So opening it up to you guys just to see if there was anything there that you wanted to, to nudge on.
No, but did you want me to jump into the contract stage?
Yeah, if you guys feel like we've covered everything there, Jerry, I'll have you take it away for the sales contract and tell us a little bit about what that SONYMA piece looks like and how it might be different than a conventional or FHA.
Well, I think the thing that realtors may get confused about very easily is that the SONYMA pre-approvals look very similar to conventional loan pre-approvals. So that can be a little confusing. On the pre-approval, there will be language on it that says this is a SONYMA approval. So what the realtors need to do with that information is on page 5 of our Bar Association contract for Erie and Niagara County, there is a section where we have to put in the type of loan that the borrower is taking out. So there is an actual section that says SONYMA, and that box needs to be checked instead of the conventional box. And that's it for the contract. It's that simple. But I think the one thing to note is on the pre-approval, they just need to read it carefully to see if it has the Sunny May language, because it does look very, very similar to the conventional pre-approvals.
Beautiful. That's a really good point. And so let's say that sales contract is accepted. Everybody's excited. We're moving forward. Mortgage application is in. Dan, you are up. Tell us all about this appraisal, because this is where I tend to hear the most, we'll say, pushback on receiving and moving forward with a Sunny May.
So the appraisal is very simplistic. I would associate it more with conventional lending than even anywhere near FHA, USDA, or VA appraisal types. So essentially, you're going to be inspecting outbuildings and taking interior photographs of those outbuildings and exterior photographs, and really just looking at health and safety items. But you won't get into chipped and peeling paint like you will with FHA, or missing handrails on stairs, things like that. So it's a very simplistic process. Somebody wouldn't even notice the difference between a conventional and a Sunny May. It's very straightforward.
Straightforward. Beautiful. And if I may ask just a couple things that people ask me when they're going into a house and like, oh, is this going to get flagged on Sunny May? So let's say there's like a broken window pane or, something to that effect. Is that going to be getting called on the Sunny May appraisal?
So the appraisal will break it down of whether or not it's health and safety or cosmetic. If it's not going through the interior of the property, it could constitute a cosmetic repair and would be adjusted for, but it wouldn't be a stipulation of a necessary repair called out within the appraisal.
Beautiful, beautiful. Okay, so just for the record, Sunny May is closer to conventional, but just a couple little nuances within it, but it's not even close to our government type loans like our FHA, our USDA, and our VAs. So it's just a little bit more rigorous, but nothing to the extreme of the government loans. That's what I'm hearing you say?
Oh, that is absolutely 100% correct. It is an absolute myth that is the case. Yes.
Beautiful. Okay. Well, I appreciate you clearing that up. That definitely, that's the sticking point I get from a lot of folks. So beautiful. Now, I did want to touch on the underwriting conditions, because I do hear this a lot from folks as well, too, is there's just more things involved with it. And here I just want to point out that, again, it's New York State. So New York State's going to come with just a little bit of extra red tape with it. So from our end, once a file is approved, when we go in and take a look at those asset statements, we're also going to be having to source all the deposits, which means we're going to be asking a little bit more of our borrower when they go through the process. Also with it, if we need any clarification from Sunny May, we have to go outside of our four walls. So if it's inside of our four walls, that information is going to come back very quickly. But if we have to go lean on somebody outside of our four walls to get clarification on anything that might be a little wonky, it's just going to add that little bit of extra time to it. And then the other thing I just want to note, because this is a big piece of it, is the tax transcripts. So tax transcripts are a big deal when it comes to Sunny May. I need 3 years of W-2s, 3 years of federal tax returns, and or tax transcripts. And to get those out of the IRS is not the end of the world, but having to have the proper forms filled out and not having somebody's taxes, not having somebody's W-2s is going to delay. So we want to just ensure that from the very beginning of the start of our Sunny May, that everybody is providing that documentation so we don't have to wait for the last minute. There is just a couple extra little forms for the agent to fill out, but again, really not a big thing. It just adds just a couple extra days here and there, and those couple extra days do add up. So I would say, like on my end, I'm usually looking at really a 60-day contract. I'm not like looking at doing like a quick timeline that we can sometimes pull off with a conventional. For us, it's really like, it's going to be 60 days. So beautiful. Did that open up anything for you guys there? Anything you wanted to jam on with that?
Actually, Chris, so from the appraisal aspect, and a lot of things that we sometimes see with the Sunny May is that a lot of people will tie renovations or improvements to the property as part of the Sunny May loan. And it's typically very streamlined, even more so than 203K and even sometimes a
Yeah.
conventional rehab loan. So it might be something that if there was if all the parameters worked that and there's work that needed to be done to possibly even have a consult regarding value and the improvements to be done, because you might be able to do other things financially within the terms of that type of product.
That's a really good point because as far as like a rehab loan, so we have the 203K or we have the SONYMA rehab loan, which is Remodel New York. It is actually my favorite of the rehab loans. Not that we love rehab loans, but like to your point, it's actually not as, we'll say, quote unquote, bad as an FHA 203K. So the SONYMA rehab loan out of the rehab loan options actually is the one that I will tend to be able to move through much quicker. So I can usually get those done within within a 90 days rather than your 60-day for a traditional SONYMA. The rehab loan itself usually takes 90 days because of the contract work. And you had mentioned the appraisal as well too. That's a really good point. Thank you. Yeah, Jerry, did you have any things that you wanted to add to that SONYMA rehab point that Dan just brought up?
No, but moving back just a little bit, I just wanted to add that I'm seeing the same thing as far as closing times. I'm
Okay.
not seeing a big delay when we're going forward with the Sunny Mae loan.
Beautiful. That's good to hear too. So I see on my end, I'm like, oh, how quick can we get this closed? How quick, how quick? And it's like, well, you know, with our conventionals, we can be a little bit quicker, but with the Sunny Mae, just ensuring that we set those proper expectations. This really is going to be a 60-day process, or if we're doing that rehab, you know, that's going to be pushing us out to potentially 90 days. Beautiful. So really the thing that I'm hearing on all the spaces is it's just a little bit more rigorous. Jerry, you mentioned just making sure you check off the box. And Dan, you're just speaking to it's just a little bit more rigorous than the conventional, but not nearly as what we see on those
I
government
don't even
loans.
I don't even know if I'd qualify it as more rigorous.
Oh,
Technically, appraisers should be doing the same things on conventional loans and
okay.
photographing improvements to the real property, including outbuildings. So I don't, from an appraiser's sense, it's
Yeah.
just noted as a Sunny May, and you're making sure that if it's not a lender requirement per se, that it's a Sunny May requirement, so you're doing it. But typically, the appraisers in our firm are already doing all of that. So there's no other nuances that or time constraints that would pose a problem in the appraisal process overall.
Beautiful. That's amazing. So it feels like this really kind of rounds out some of those myths that we hear coming through on Sunny Mays and not being accepted. And then just the process itself, you know, just a couple little things with the mortgage piece of the puzzle, but on those other pieces, it seems to be lining up for pretty much the same space. So any other final words, comments, or smart remarks we wanted to throw into the space for people to have that knowledge about?
The only thing I want to add is just a little bit about the closing process.
Oh,
The
thank
closing
you.
process is very similar that you're going to see to like a conventional loan. You're going to come in and sign those typical docs like the note and mortgage, the closing disclosure. The only thing you may see that's slightly different is if you take advantage of something Sunny Mae has to offer, like the closing assistance programs like DPAL, you may have a few extra documents to sign, but that's it. It's very simple. So
Yeah.
it's very similar to another loan closing. There's just a few more documents to sign. So it's a great process, a great product, something that everybody should really look into.
Yeah, I fully agree. So on our end, again, like there's just a couple little extra things that somebody would be signing, but to us, it's business as normal. Beautiful. Well, and then Dan, any last final words, comments, concerns?
I would just like to say again, if you're a real estate agent, you're watching this video and you have concerns regarding that, we're available here to answer your questions. And I'm
Mm.
always available to take your phone call. So if you want to reach out and ask me a couple of questions to ease your mind, I'm here to do that.
Beautiful. Thank you, Dan. I so appreciate that. Well, I want to thank you for your time. I want to thank everybody for tuning in. Jerry and Dan, I want to thank you for being available to help us demystify some of those Sunny May pieces so we can have more additional people coming through the home buying process. So again, thank you
Welcome.
for
We're
your
glad to
time.
help.
Yeah,
Yeah.
absolutely.
Thanks, Chris. I do appreciate it. Thank you.
Yeah, yeah. Thank you guys. I hope you have the most amazing day. Bye for now.